Hello and welcome to the first trading day of February. I do hope generous, somewhat profitable for investors right there. Good morning, good evening, wherever in the world you might be watching from. Let's get the top stories that set your agenda for today. Now, we'll see the Africa Development Bank this time says it has successfully completed the sale of its much-anticipated hybrid capital note, marking a significant milestone in the first-ever financing of its kind among multilateral development banks. This comes as the Multilateral Development Bank faces increasing pressure to boost lending opportunities, particularly to aid developing economies in addressing crises such as those arising from climate change. The $750 million perpetual hybrid notes carries a 5.75% coupon, which is lower than the initially suggested 6.3%. Meanwhile, this unique debt equity instrument, which is deeply subordinated, has a lower credit rating than the lender's AAA bonds, and investors have the option to redeem it after 10.5 years or every 5 years thereafter. And in a significant development for Nigeria's financial landscape, FBN Holdings PLC has appointed business mogul Mr. Femi Otedola as the new chairman of its board of directors after a long power contest for control of the oldest bank. This leadership change follows a recent board meeting where Mr. Otedola succeeds the outgoing chairman of the board, Alhaji Ahmad Abdullahi. The appointment signifies a new phase for FBN Holdings, and the company under its new leader hopes to strengthen its market position and deliver increased value to shareholders and customers. Stakeholders and analysts are closely watching this transition, anticipating the potential impacts of Mr. Otedola's chairmanship on FBN Holdings. And definitely we know the CBN has been speaking a lot with a lot of circulars coming, and we had a couple yesterday, and this time the bank is saying suspected cases of excessive foreign currency speculation and hoarding from Nigeria banks are to be addressed right now. The new circular introduces a set of guidelines aimed at reducing the risk associated with these practices. The circular, titled Harmonization of Reporting Requirements on Foreign Currency Exposures of Banks, highlights the CBN's concerns over a growing trend of banks holding large foreign currency positions. The circular also stipulates that banks should maintain adequate stocks of high-quality liquid foreign assets, such as cash and government securities, in each significant currency, among other requirements. We'll definitely be drilling down on what this means for the FX market and the banking industry going forward. And there you have it. We have the closing gong for the month of January. That definitely, we know what the closing gong means. It means that that's the end of a trading day or the month. And this time, the governor, Enua Yahaya, visited the exchange to explore how the state can harness the capital markets to stimulate sustainable development. The Gombe State Governor, during the closing ceremony, announced the state government's plans to raise about 30 billion naira from the capital market through issuance of green bonds.
The green bond is an initiative aimed at raising funds in order to finance eco-friendly and environmentally friendly investments, especially in assets that will contribute to restoration and upliftment of human life, so that we can reduce the impacts of climate change and global warming. And we aim to do so that we raise funds. We are expecting to raise about 30 billion naira for the start, and we may break it into segments, but that's our intention. And we're sure with the support we saw and the acceptance that we've gotten from the floor and from the chief stakeholders, we are going to hit our target.
And yes, as I did mention before, we've seen a lot of pressure on the Naira in January alone, and definitely the Central Bank of Nigeria. We've seen a lot of circulars, come out, and just yesterday, we see the banks were actually addressed in the latest circulars. Also, IMTOs, International Money Transfer Operators, were also addressed. New guidelines at this point. We're all trying to save the Naira at this point. Joining us now is Dumebi Oluwole, senior economist and at FDC and STAIRS, joining me right here in the studio. Great to have you, Dumebi.
Thank you so much for having me. Good morning.
Yes, I don't know if you can keep count of the circulars we've seen from the central bank. At this point, they just keep coming back to back.
Yes, and they're important to somewhat signal to the economy and try to instill confidence. But if we can take a few steps back to understand why the circulars are even coming out in the first place, and also trying to understand and situate it into what's happening with the forex market. So starting off, I think on the 29th, the exchange rate significantly depreciated, at least per the FMDQ reporting. It depreciated from around 890 Naira to a dollar to about 1,300 and I think 52 Naira to a dollar. The next day, it moved up again, to over 1,400, and as of yesterday, it was about 1,500. So the reason why this happened is for two things. Number one, the CBN had earlier come out to say that there was some level of misreporting with FX transactions from market participators, dealers, DMBs, and the likes. And then FMDQ, in response to that circular, alongside its own regulations and its own evidences per its portal and reporting, realized that they had to also update their methodology, change the methodology to reflect the market rate. And this is because initially what was reported on FMDQ, and I think from the CBN as well, is a weighted average of the last 10-day trades. But right now, from both the CBN and from FMDQ, we're going to see a more holistic approach, capturing rates from 12 noon the day before up until the next day, so meaning 24 hours trades. And the price you're now going to see is actually just closing rate for the day. So initially, what was being reported was in the morning as well. You also find some indicative quotes on FMDQ's platform. They're saying they're going to stop that. Basically, the new methodology is now going to reflect market realities. And what now happened afterwards is that we saw a very quick convergence between the official rate and the parallel rate. As a matter of fact, I think on the 30th, the official rate was higher than the parallel rate. So what we're seeing now is a full convergence between the official rate and parallel market rate. And more significantly is that it somewhat seems that there has been two devaluations of the currency between May 2023, when we initially had the first FX liberalization, and just this January, we're seeing another. And altogether, we're seeing the currency lose over 40%, over 50% really of its value in a matter of 8 months.
But if we look at January, at this point, we see the start, the official window was about 872 Naira to start. Then obviously ended about 1,455 Naira to the dollar. 40% down. That's just January. That's for the official window. Then we have the parallel market. If you can put that up for me, 1,215 Naira, the parallel market, to 1,470, 17% down. So definitely we see the urgency. Why the central bank is releasing all these circulars, all of these guidelines at this point. But they did mention something about some of the practices of the banks, at this point, holding too much dollars, trying to create some kind of hedge and profit, from the volatility that we see in the market. Banks shouldn't do that.
I mean, I wouldn't say they said banks are doing that. What the circular is trying to do, clearly by all indication, is they're trying to mop up or somewhat reduce the demand for dollars at the official window.
So the banks weren't just holding all of that?
Of course not. So the thing is, when you look at the activities that happen on the FMDQ market, you realize that banks are pretty much the largest players in that market. And what the CBN is trying to do with that particular circular is two ways. First, trying to help the banks hedge against foreign exchange losses. Remember that I think up from last year, we did see a lot of banks and even businesses, multinationals, recover incurred a lot of FX conversion and translation losses. So what this does to some extent is somewhat reduce the bank's exposure to such losses, because the net opening balance for a bank at that point in time is pretty easy to lose at that point when you start the trading day. So the central bank is saying 20% of your shareholders' funds should not be held as, once it is in excess of that, you can, try to mop up that money, reduce your exposure to FX conversion or FX translation losses. On the second hand of that, what that also does is it somewhat helps to reduce too much activity, like too much demand at the FX market outweighing supply. So it's somewhat of a win-win to an extent. But then again, when you also look at the fact that if we backtrack a bit, you realize that the main issue here is dollar liquidity. And the main sources of forex for Nigeria were still having issues with that.
But the CBN is making it look like the banks have a lot of dollars. And if they push all of that out, give it to some of those customers, then there'll be liquidity.
So this is it. Banks are in the business to make profit. The same way a multinational is trying to buy some dollars, boost their business and stuff. So everyone has some dollars that they will definitely be trading in the FX market. And when you say banks are, banks are not speculators. They have dollar positions and they will trade those dollar positions. And remember that people like myself and you can walk up to a bank to actually request for BTAs, PTAs. So
the banks can get it when we go there.
The point is that, Ladi, you're trying to put me on the spot here, but the point is that the demand for dollars from banks are not aloof. They're not just coming out of thin air. People are demanding for the dollars the banks are demanding for on the FX market in the official window. So really what the CBN is just trying to do, like I mentioned, two things: trying to hedge the banks away from FX losses. Remember that if you have Naira, if you're trading in Naira and maybe you also lend in dollars, when that person is paying you back in Naira, to some level, to some extent, you would definitely make some losses. Aside from that, there's still a lot of distortions in Nigeria's FX market. And I think that's where our conversation should really be focused on the problems that Nigeria's FX market is facing, so that we actually point policymakers to the solutions that we can actually create or we can bring out to solve the problem. And remember, like I mentioned, when we look at the issues that Nigeria's FX market is facing, it's two ways. There's an issue with market equilibrium, meaning that supply is consistently underperforming demand. Right. And what needs to be done is to support supply. And then the second thing is there's fear, there's panic, investor confidence is low. How do we also hedge against that? And when you look at the cycle of I'll call it the life cycle now, it all starts with addressing the issues with supply. And the second part of it is CBN being more transparent with its policy. And that's why we're seeing a bunch of circulars just coming out, so, okay, this is what we mean,
what about
this is what we're trying to do.
The
IMTOs. Of course, it's another thing to reduce the panic, right? So remember I said there are market distortions. And apart from supply, we also see that we have some level of restrictions. And the CBN's policies or CBN's, I'll say, communications are somewhat still unclear to the markets. And people just speculate, okay, could this be what they're trying to say? Is this what they're trying? And then the markets react in response based off of what they think the CBN is trying to say. So with the IMTOs, remember there was some level of restriction to the rates that the IMTO could charge for transactions. I think it was plus or minus 2.5% of the previous day's rate. But the CBN now is saying, just charge at the market rate. So what this does is reduces the restrictions on IMTOs. It makes the market more transparent, and it also makes it so that everybody is trading at the same rate. So by the next MPC meeting, we should see some level of coherence in all of these policies that the CBN is, dropping in trickles. And the end of it all is to instill investor confidence, increase it so much so that we're beginning to see investment inflows trickle in. Now, this takes us back to the supply equation. on the fiscal side of things, we need to see crude oil production significantly increase so that oil receipts increase. Then on the investment side of things, both from portfolio and direct investors, which has significantly declined. I think between Q2 2022 and Q2 2023, we saw almost an 80% decline in total capital importation into the country. To address that particular problem, that's where instilling confidence comes in, and that's what the CBN is trying to do in trickles. And by the next MPC meeting, what I was trying to say is we need to see, number one, a more hawkish CBN. You need to increase interest rates so that it's able to narrow the inflation interest rate differential and reduce the negative real returns on investment. What that does is tell investors that Nigeria is open to do business. You can bring in your money, you get positive, you get good yields compared to what you're going to get out there. Remember, exchange rate is the price of a country's currency in the international market. So you're not only competing with external vulnerabilities on your country's currency, but you're also going to compete with domestic shocks. So addressing domestic shocks and trying to hedge against external shocks by increasing interest rates are the two things that we need to do now. And I think the final thing in terms of policy directions would be to avoid policy contradictions. An example would be increasing interest rates and allowing money supply to keep increasing. That way you're contradicting your policy moves. And again, it does send conflicting signals to the market.
And I guess we also need to see synergy with other agencies, because we know food inflation is a big driver of headline inflation at this time. So the Minister of Agriculture needs to do something about getting food inflation in check. But I mean, food inflation down.
When you look at the problems, again, looking at the root causes of all of these issues helps to understand what policies and helps us to somewhat consolidate the kind of policies and solutions that we need to, make. The first one is when you look at food inflation, what is driving food inflation? Two things: exchange rates and low agricultural productivity. Why is agricultural productivity low? There's insecurity. Farmers are not able to go to their farms. Poor storage facilities. Addressing all of those issues are on the fiscal side of things, and that's why I mentioned policy consolidation. You can't see contractionary monetary policies happening and expansionary fiscal policies happening. And by expansionary fiscal policies, I mean that the federal government is spending meaningfully on the economy, because the government still needs to spend. But the question now is, what are you spending on, and how does that trickle down to create economic development and economic growth and somewhat solve the structural deficiencies that are plaguing the country? In terms of food inflation, that's where the federal government should spend and focus their attention on. It's not by intervention schemes that we're not properly monitoring. We need to ensure that these issues that are reducing and stifling food production are significantly addressed and catered for. Then on the second side of things, you look at the exchange rate, because right now that's a significant major driver of food inflation through higher imported costs. The exchange rate pass-through effect has become more potent, and the way to do that, like I mentioned, is what we're seeing the CBN somewhat trying to do now. We need to instill confidence.
The CBN has
bring in the dollars.
Action mode, at this time.
And that's exactly what we need.
Short-term benefits of these two circulars for the IMTUs and for the banks.
Simple: convergence. The market rates should be more transparent now. We should see an increase in FX transactions, because now it should be easier to get at the market rate. There's the arbitrage opportunity has significantly declined, because literally, if you go to the parallel market, you're literally going to get the same rate if you go to the commercial bank. So there's really no spread, or even if there is a spread, because it's normal globally, but the spread right now is not too much.
And we don't need that parallel market moving farther away.
Exactly.
We need liquidity in the official window so that we can get all the dollars we need at this point, and not demand dollars too much. Thank you so much.
Thank you so much.
To Maybe Oluwole, senior economist at FDC and STAIRS. Thank you so much. All right, so we've been having a lot of news at this point. Market news. You see, First Bank of Nigeria Holdings appointing Nigerian billionaire and businessman Femi Otedola as a new chairman of its board. We've got a lot of earnings. It's earnings season this time. We've got one from BOA and Transcorp. So definitely there's a lot of activity in the markets at this time. Let's bring in Mr. Olatunde Amolegbe, MD CEO, Arthur Stephen Asset Management, joining us via Zoom. Great to have you on the show. Good morning.
Good morning, Ladi. Nice to be here.
Fantastic. So definitely big news yesterday with FBNH and Mr. Femi Otedola there announced as the chairman. How do you see this impacting, the bank structure and investor sentiment towards that stock?
First Bank is, as you know, is one of the bellwether stock quoted on the exchange, and it's a bank that have had quite a bit of corporate and governance challenges over the last, I would say, possibly 10 years. And it's clear that those corporate and board challenges, have affected the performance of the bank. You and I know that when you say the bank with the highest level of all the indices you can mention, be it in terms of size, be it in terms of total asset, be it in terms of even profitability. But you will agree with me that in the last say 10 years, all that have changed. The bank.
All right, it seems we're having some network issues there. We'll still try and get back, Mr.
Some of its the biggest bank is anymore.
Okay. All right, Mr. Amolegbe, I'll come back to you once the audio is much better. But let's quickly dash on to some of these earnings now. We see, started with Boa Foods at this point. We see revenue there, 728.44 billion. That's up about 74.13%. That's for Boa Foods. Full year 2023 highlights unaudited results. Gross profit, that was up about 89.27%. Pre-tax profit, we see that 12.69% up. And after tax profit, we see that's up 22%. So we're seeing quite an impressive outing there for Boa Foods, despite the headwinds we see in where they operate at this time. We see food inflation sky high at this point. We also have Transcorp. Also, we got their earnings yesterday. Releases unaudited financial statements, and from we see for Transcorp, revenue was up about 44%. Gross profit, that was up 60% at 105.98 billion there. Pre-tax profit up 85%. Let's try and bring back Mr. Otedola Amolegbe now. Let's try that again. We had audio issues there with the internet. Mr. Amolegbe, can you hear me now?
Yes, I can hear you.
Fantastic. So, you were trying to finish your thoughts there on the impact for the share price when it comes to FBNH with this Mr. Otedola there taking on the reins as a chairman. So you can finish your thoughts on that because we did lose you for a moment there. Then we'll go to the earnings.
So like I was saying, the corporate and the board issues that the bank has had in the last, say, 10 years had affected it. And it has affected its positioning regarding the Committee of Banks in the country. The hope now is that the appointment of Mr. Otedola sort of starts to bring to rest some of the corporate and board issues that the bank has had. And the hope is that, gradually the banks can start, assuming its position, again, in terms of the size, in terms of profitability and other indices. And then the shareholders of the bank can start to benefit from, what we know is clearly one of the bellwether banks in the country.
All right, I'm still looking at that, the financial services sector. We see the banks, the FUGAs. We've seen a continuous decline in that counter for a couple of days now. From last week, also, we're seeing losses as much as 9% on their share prices. What's going on? Why is the profit taking continuing so long when it comes to financial services in the market? Mr. Amolegbe, I don't know if you heard me.
If you could take that again.
Yes. So for the financial services counter, we've seen continuous decline. Profit taking is still going on that counter. Even at yesterday at the close, we're seeing the fugas there. The tier 1 banks down about 8% up to 10%. Why investors taking profit there so much?
Well, the investors have also seen gains of 30-40% on some of these counters in the last 3 months. So the market will do what it will do. Typically, when people make money, they want to take some of it off the table. So I think what we're seeing now is just a natural profit-taking trend that normally the market always adopts. The expectation is that the price will come down, and it also provides an entry opportunity for people that did not enter before. The fundamentals of these companies are still strong. We've seen some of them started to bring their results out, their unaudited results out, and see that their performance is strong. So, so the market is just doing what it will do, which is typically when you see gains, people want to take profits off the table. And so my expectation is that, very soon it will turn around again, and we'll probably see another upward trend in the prices of these stocks.
Right, well, we'll definitely be watching out for that. But you did mention, investors that are on the sideline also trying to get into this market, and definitely a pullback is the best option, to get into the market. But looking at the way things are, at this time, there's a cost of living crisis, inflation, currency devaluation. Investors, consumers are having to deal with a lot at this time. Talk to me about how this is impacting, the desire to invest. Is it still there at this point?
One of the major side effects or main effect, if you will, of inflation is the fact that the cost of living goes up, disposable income comes down because, of course, you're now buying products at much higher prices. The direct impact of that is that you have lower savings. Lower savings also means less money available for investments. All right, and while it appears that we have not seen that impact the stock market at this moment, is that the major players in the market seems to be institutional now, not necessarily the retail investors. So until we actually see statistics of retail investor participation, I suspect that what we're going to see is that retail investor participation will probably have reduced a little bit because, again, because of higher cost of living, savings is likely to have also dropped. And then the amount of money investors are able to put in investments will probably have reduced also. But the exchange is probably not feeling it that much because, of increased participation by increased participation by the institution.
Okay. All right, Mr. Amolegbe, I guess, at some point, some people rather, eat than, take that money and go invest, because a hungry man, you can't really be investing much because you can also lose your money, out there. Thank you so much for coming on, Mr. Olatunde Amolegbe, MD CEO, Arthur Stephen Asset Management. It was great having you.
It's my pleasure, Ladi. Thanks for having me.
Thank you so much. All right, so we'll take a quick look at some of the numbers from yesterday now. We'll see the all-share index, 101,000, still above the 100,000 level, 1.90%. That was a drop we had for the final trading day of January. Equity cap, 55 trillion. Let's look at the activity, the trading activity. We see volume was still on high side there, 15.44% compared to the previous session. Value was up 102% at 22 billion. That was traded, but we had lesser deals at 14,288. Top trades, Transcore, 76 million, UBA, Zenith Bank, 61 million. So definitely, it's all red for the sectors that we track here. Banking again, taking a big hit, down 8.07%. Consumer goods, 1.82% down. Insurance, 3.02%. Industrial goods again, profit taking all over these counters for the last trading day of January. So right now is a countdown to the first trading day of February, which is today. Let's see how the market closes. But maybe we might see some kind of cherry picking and get some outlook for how the market's going to fare in February. That's it from me right here on Business Morning. Back to the Sunrise Daily team.